Vincent Lee here, everybody, with Track and Trade. We're gonna go right into this video real quick. Today, I just wanted to talk about actually taking a position, how to take a position the right way, when's a good entry point, how do you know that, and how you can actually just very quickly go through your charts and be able to decide, hey, is this a good entry point? Is this a good support? Am I at resistance? So how does that work? So like for example, I'm looking at the future for the NASDAQ. So this pretty much just trade based off of how the NASDAQ look. And as you can see, I've already took the liberty of drawing this support line right here because this support line shows me a trend of where the price had changed its direction at. So if you can see right here, the price changed its direction, bounced off of that, and actually made higher highs. Then it pulled back, built this support right here. Once it broke above this price point, it made higher highs. Then it dropped back again, pulled back up, tried to break through the price point right here, got rejected, and then changed its direction, built this support, and now as we can see with how this future is showing us, the price has went all the way back up, broke through that previous resistance, and now it peaked out and it changed its direction, and now it's looking like it's bouncing at that support again. So this is just an example on how just drawing a support line, I'm able to understand when it's a good entry point, because based off of what the chart's showing me right now, this will be a good place to enter. Like I said, you should never trade based off of somebody else's opinion. Everything I'm saying, of course, is an opinion. It does not have to happen, but based off of what the pattern is showing me, guys, it has a tradition of going up once it hits this price point. So if I wanted to trade this, let's say if I wanted to trade something that reflects off of the NASDAQ, like Amazon, Facebook, Tesla, something like that. So let's say if I wanted to trade, Amazon's too expensive. Let's go to Tesla. Let's do Tesla instead. Let's say if I wanted to trade Amazon, guys, I've seen now, and you can even look at Amazon's chart and see that it has a similar support, because everything that trades in the NASDAQ reflects off of the NASDAQ, of course. So because the NASDAQ has this support, we see other companies have this similar financial support. So if I wanted to take advantage, I would buy in. If I want to buy in, I will buy in based off of confirmation, so I can wait until I see another Japanese candlestick, or it makes highs, it breaks past a certain price point that I feel like is appropriate. So if I wait until the NASDAQ break above $8,700, and then I decide, okay, that's a validation. That's when I feel like it's confirmed that it's actually going up more. Then I can get in. I can set my stop loss for 2%, on however much I want to lose. I advise it to be none more than 2%. But I can set my stop loss, and then I can also know where my exit point is. How much money am I trying to make before I'm done trading this spread? So that's what you should be thinking about when you're planning your entry, when you're planning your exit, when you're planning on seizing an opportunity. And that's for any spread, guys. That's if it's going up or if it's going down. You can very easily just go to your 4-hour, 180-day chart and just take a couple of seconds to draw a support, to draw a resistance, and to really understand where's the price range right now. Because I want you to remember, it's not about if something has the potential to go up. That does not matter. It's about your entry point. If your entry point is bad, if you do not enter at the right price point, if you enter too high and it barely has some to go up, or it takes forever to go up, or it goes down because you've bought it at an overpriced point, so it may actually hit higher highs in 30 days or 60 days. But because you bought it when it's very expensive, and traditionally when it hits this price point, like if you was looking at Zoom and we're looking at this resistance right here, traditionally when it hits around $150, $160, it is now overpriced. So what do you think is traditionally going to happen? It's going to go down before it goes back up. And that is how you plan before you get into a position. You look at the chart, you see, okay, is this a resistance? Is it overbought at this price point? Okay, let me wait until it goes back down to a place where it's oversold, as you can see down here, where you see it traditionally hits this support and changes its direction, let me buy around that area when it has confirmation, when I see that it's actually making new highs and it's going up. And that way I validate what I'm buying. It makes sense to buy this versus FOMO. Oh, I think it's gonna go to the moon. Its force is gonna get ultra strong, and it's gonna break the rules of the stock market. And it's just gonna do whatever it wants to do. It's gonna fly, and I'm gonna make millions of dollars. And that's what we all think when we buy something, and then it goes down. You lose money, and then you lose more money, and then you revenge trade, and then you go broke, and then you never want to trade in the stock market again. That is what we're trying to avoid. So do that by taking a little time, evaluating the spread, evaluating what the price is right now, making sense, building a game plan around that, building a risk management plan around that. And if you're not confident in the pattern, don't trade it, guys. That's it. Just don't touch it. There's so many spreads out here. There's so many different contracts, futures, bonds, options, mutual funds, all these different things that you can trade, guys, that's going to offer you something worth taking a trade, but you have to understand it. So take time to understand what you're trading. Take time to inform yourself. Trade off of your own opinion, and never trade something because you feel like you're missing out if you don't get in. You feel like everybody's saying it's gonna go up. You need to get in, because those are the people that end up losing all their account and never trading again. So with that being said, guys, I hope you enjoyed this video. If you like it, please hit the like button. If you didn't like it, please hit the dislike button. If you don't like me, make a comment. Tell me how big my nose is, guys. I know my nose is big, it's sexy. You get what I'm saying? This as sexy as my bald head, okay? So if you like that, guys, please post a comment. Just leave a comment. Tell me a video that you might like, and I'll make sure I get that to you. If you're interested in trading the stock market and you've ever wanted to know how to trade the stock market and you like my style, guys, that first link below, I have a special promo going on right now, 90% off, okay? 90%. You get it very cheap right now. Very. That's that first link. If not, if you want to join something free, I have a Facebook group below. You can join that. That's very free. I post stuff in that all the time. Just things I'm watching, things that might go up, things that might go down. Feel free to utilize that. And then, of course, I have a Discord channel below. That's that third link. You can click that, guys, and join our Discord. And I'll be in there all the time, too. I'm twerking in there all the time, guys. All the time. With that being said, I hope you enjoyed the video. Peace. Take care. Be safe. Keep your toilet paper on deck, and God bless you guys.